Most people struggle when going break even, but in this video, I'm going to show you exactly what I do to go break even and how you can do it too. So following our Grizz gap entry model, we're going to be looking for our inverse fair value gap. And in this case, we see a obvious fair value gap. So we're going to be waiting for a close above. So as you can see, we closed above. And in this case, why would this be a bad break even point? So the reason I personally wouldn't go break even in this area is because it's way too close to my entry. So in this case, this would be my entry. And I would put stop right here below the fair value gap close. I would target a high, and in this case it already hit instantly. So what I would do back then, which would not be that smart, is instantly go break even off this super close intraday high. But the reason that this would fail most of the time is because, as you can see, market literally instantly came back down to our break even point, but this would just get us out of the trade even though the trade literally looked perfect. So what I do instead is I look for intraday a high where it's at least targeting 1R. So I bring this down to at least targeting 1R, so it's targeting 1.19. So in this case, this would be a good break-even point because at least I would still be in the trade if the market comes up or down until it hits this level. So let me just show you exactly how this trade would have played out. So as you can see, market hit our break-even point. So in this case, we'd go break-even right here, and obviously we would wait for target to just play out. Also, when you're trading prop firms, what I tend to do is take out partials. So in this situation, we would be taking out probably 50% of our position in this level just because it's another intraday high. So let's just see if market would have hit our final TP in this situation, and clearly it did. Just based off the initial momentum candle, we knew market was gonna go all the way up to the top. So right now I'm gonna show you another example of this break-even method. So in this situation, following our Grizz gap model, we see our liquidity sweep down here, and we see our inverse for value gap that had happened right here. So in this case, we see our intraday high, and we would enter off this candle close or a tap back in. We put stop below the fair value gap, and then we would target a higher time frame liquidity. So let's see if this is at least a 1R. So it's not a 1R, but in this case, we would make an exception just based off the fact that we see market already tapped this level a couple times. So this is telling us that the market wants to go higher based off these taps in the market. So in this case, we put our stop, or we put our break even here. We could target this liquidity, or we could obviously target a lot higher. And this trade would have been a beautiful trade just based off our break even method. So the second that the market would have tapped this level, we would have instantly moved stop to break even. And that's how you literally never lose a trade in the market. This also helps with risk management. So if you guys are struggling with your risk management, using this method, putting your break evens at the intraday highs or levels where market is most likely to reject off of, that is what's going to save your trading, especially if you're trading prop firms where you can't really lose much in a long period of time. So let me show you another Grizz gap entry model. So we see our liquidity sweep, we see our bearish fair value gap right here. And now in this situation, we'd be targeting these highs. However, as you can see, after the close above, we would enter off the next candle, which is this candle. We would put our stop at the low, or not at the low, but below the fair value gap close. We would target this high. But in this situation, as you can see here, market came up, came back down, but then came back up right here, creating this internal high. So in this internal high, this would be our break-even point. So in this situation, to have better risk management, the second that market came up, came back down, and we had already been entered since over here, so the market would have been back at our entry point. We don't expect market to come all the way back down, because if this was a really good trade, well, then the market should instantly just go back up and hit our TP. But the fact that the market came back down to our entry point is telling me that maybe buyers aren't as strong. So the second that market hits this internal high, that's where we would be putting our break even. So as you can see here, market hit our high, we put our break even, but then as you can see, we got stopped out literally right here. However, in the long run, if we had held, which we really wouldn't have done, in the long run, this trade would have actually saved us from losing our initial profit. So instead of holding all this chop, we got out early and we got out risk free. So that's how you negate your losses, and that's how you become a profitable day trader. Now I'm going to show you guys one more example, and it's going to be the final example to make sure you better understand this break-even method. Something to remember when you're trading the Grizz gap strategy is understanding when the trade is valid and when it's not. So in this case, the trade wouldn't have been valid. So usually what we would do is enter off this close above the fair value gap, target below our fair value gap. Notice how it closed whilst taking liquidity. So ideally, we would have wanted the candle to close below here, and then we would use this as our break even. But since that didn't happen and the candle closed above, it would have made this trade invalid just because the same candle that was supposed to tap us in also took our break even. So this wouldn't even have been a valid trade to take. So this is something to keep in mind when you're looking at the market and making sure what trades to take and what trades to not take. Now, if you're interested in watching me trade live, click on the link in my bio and don't forget to subscribe, because that's letting me know that you guys actually want to watch this content so I could be posting more free educational videos.